For the dollar Japanese yen, I was thinking of the behavior of this particular pair ahead of payrolls, that it has become a bit tricky lately. We usually see this kind of behavior, the price stuck in a small range, moving back and forth, and without definitions, and spending at least 3, 4 days in this level. And all of a sudden, there's some sort of directional moves in the 24 hours before the non-farm payroll report. Beware of that. I have observed that kind of behavior at least for the past, I don't know, 5, 6 months. Take a look at your charts. Range, some directional moves, a bit more range, and then the definition coming with payrolls. There's a word I would like to add about payrolls that I forgot to mention earlier. It's if the headline reading and the unemployment rate are pretty much in line with expectation, market will be paying a lot of attention to wage also, right? Beware of wage, because weaker wage will probably neutralize any positive effect the headline may have on the dollar Japanese yen. Okay. Okay, there we go. Anyway, beware of some directional spike ahead of the release of the non-farm payroll, but mostly expect the pair to remain range bound. The levels I'm watching in here, take a look at this FIBO. This is the December rally, right? And we have been holding above the 38, but unable to recover above the 23.6 pretty much since like January, okay? So over a month that we have been trapped in this particular range, well limited by Fibonacci levels. And what I'm also watching is the price is hovering around its 100 moving average in the attempt to broke lower, but recovered, right? And moving average maintains its bullish slope, and the distance between the 100 and the 201 keeps widening. So somehow this is telling me that downside seems limited at this point in the longer term, but we need a break higher. We need a bit of definitions in here, and they are not taking place. Okay, this Fibonacci resistance around 1450, 1460 is the immediate resistance, sorry. And I'm watching this February high at 1495 as being the next one. In one word, I would love to see the pair settling above 15 to think about buying it, and probably advancing up to 60 and 61st and completing a 100% retracement towards this height around 1860 also later in the month. Beware of the fiscal year end in Japan. I believe that we discussed it. The pair tends to be under pressure in February and March. It's not an easy rally to the upside in those particular months, okay, of the year. What another thing that's worth mentioning about the dollar Japanese yen is that the pair is no longer trading in correlation with stocks, right? Usually, when we have stocks rallying to record heights, we see this particular pair soaring, right? And that didn't happen, right? What's moving actually dollar Japanese yen are yields, U.S. Treasury yields, right? So when we have a decline in dollar yield in U.S. Treasury yields, we see the pair falling, and when yields recover, the pair recovers also. So it's worth keeping an eye on yields when you want to trade the dollar Japanese yen. Anyway, the lows around 1350, and for me the immediate support. And to be honest, I don't see a pair going down to 12 unless we have really bad news coming from the US. But with the payroll report, I mean, right? Really, really bad news coming from there. I don't believe we're going to break below that.
Welcome to a market to end all markets. Welcome to FX Pro.